Jim Duquette. It is November 7th. Every year it's like the older I get, the faster time goes, right?
Gosh, yeah, I don't know where it all goes.
You got young kids, their perspective of how fast the year went versus yours, it's got to be just night and day different, right?
Oh yeah, I remember as a kid, I just thought time just crawled along, and just as you get older, it just flies by too fast. You want to kind of reverse it. Enjoy these days right here.
We need a Benjamin Button moment, right? All right. So if we had a theme to today's call, what would you give the theme to be?
Man, it's a mixed bag.
Yeah.
Yeah.
Well, I think to me the theme would be you can't be a rock star 24/7. There has to be downtime. There has to be times of recharge. There has to be pauses in the chaos. And I think we're going into a short, I'm going to call it a short period of time of just a pause, or a relaxation, reflection, a break from the wild chaos that real estate sometimes is. And I think maybe that's what I would consider the theme to be. What do you think?
Yeah, I agree. You still got to be wary of during these pauses that you don't lull yourself to sleep. And when everything wakes up, that you're still asleep, right? So as the people that are taking advantage of a market like this are the ones that are just building and building and building, right? Where squirrels, we're just accumulating everything right now.
Yeah.
And because when it's time, you got to be ready for it. Otherwise, you're going to be stuck in the moment trying to build and build and build, and the other people are going to be going.
I'm going to go back to my rock star analogy. This is the time to write new music. This is the time to come out with a new album, right? Like, let's go back. And I've made mention, my number one fear for real estate agents right now is their wallets are still fat and they still have closings on the books. And there's not a behavioral change happening. And to me, the behavioral change is let's go write a new album, in the analogy of the rock star. Like, let's go do something a little more than we've done in the past. Let's go do something a little bit different than we've done in the past. How about let's go do something because we weren't doing anything in the past? That could be part of the conversation. But here we go through numbers, and truth be told, numbers is really kind of talking about what's already happened. Yet the bigger conversation is always about where we're going and what's coming, right?
Yeah. Yeah, to your point there, it takes me back to an old quote I heard of, don't confuse busyness with business, right? You can be feeling like you're doing a lot of productive things, but you're not doing the things that really matter.
100%. So what do I predict? I predict we're going to have a slower than we wanted, or slower than we're used to, November, December, and January.
Yeah.
And I think February's up for debate, but March will be flying high again. The spring market will take off. People won't be as emotional about interest rates come March next year. We're still dealing with some of that emotional rebound of a change in interest rates. But the question is, hey, you still got a mortgage. You still got gas to put in your car. We got to go sell some houses in the next 3 months. Hopefully the activities and the opportunity of right now will carry us, right? And that's really what we're talking about.
Yeah, it's going to be curious, and just looking at some of the graphs, and now you've got a year's worth of graphs to kind of compare. And I agree with you. February's up for debate. It wouldn't surprise me if you look at last year's graph, there was such a deep slide, and I wasn't even talking about it, but there was such a deep slide going through January, February, and we had a huge rebound of March, and it just kind of took everybody's minds off of what we just came out of. but our dip didn't end in December of last year. It ended in February.
Yeah.
So it wouldn't surprise me if over this year and then maybe next year, we'll see how everything shakes out. But that's the new graph we're looking at until things really stabilize.
Yeah. Well, let's run through the numbers. So inventory, I was a little nervous last week. It was a little low, came back up this week. This is Rockwall County. We've got 26 active option, healthy. Canceled's a little higher, but that picked up the end of the October listing drop, right? 15 expired, picked up the end of October listing drop. Pendings at 43, closings was 53. That was the end of the month total. You look back a month prior, the end of the end of September was 52 as well. So in Rockwall County, we actually went up one closing from the end of last month, just in a 7-day time period. But if you look at the trajectory of a 4-week period in September compared to a 4-week period or maybe a 5-week period in October, I don't think we're off that much, to be honest, in Rockwall County, only a little bit. If we run over to Dallas County, 1,100 in inventory came back up, 272 in option pending, 103 canceled, certainly double digits in the canceled for 3 weeks. I'm not sure we really saw that in the previous few weeks. 111 expired, pendings 371, and 426 in closings into the month. You definitely see a little bit of a downward trend in closings in Dallas County here. What do you make of that so far?
Yeah, I was really interested to see what the end numbers in October were going to end up looking at like. It's not surprising, but I look at that and see, one of you were talking about, we got to change what we're doing. We've got to cast a wider net. I was talking with a group of people last week, and that was one of the things I told them. If you're looking in your concentrated area, you're going to be, in one sense or another, you're going to be dealing with a very limited amount of buyers in a buyer pool, right? But if you cast a wider net, right, we get out of this a convenient zone, right? That, well, it's convenient just to stay here in Rockwall, or maybe just drive across the lake. I don't want to deal with the traffic. If we can get past that, this shows me that there's a lot of closings happening out there. You can go out and get any one of these in any one of these counties. I think that's the power of looking at all these different graphs.
Absolutely. And I mean, in theory, that's kind of what the expansion model of Keller Williams really started with, was when you get to a place of saturation, in order to increase the volume or increase the units or increase the income coming out of the business you're running, sometimes you have to cast a wider net, expand a little bit different geography. Let's run through these real quick. So Collin County, 838, the inventory came back up. 127 option pending. Certainly looks like a downward trend here in Collin County. Pendings at 223, which seemed to have kind of held. 270 for the end of the month closing total. I'm not sure you see it in closings yet, but it's holding. Jim, one of the things that I'm going to find interesting is this expired number.
Yep.
And it's not because the houses aren't selling. I think there's going to be a lot of inexperienced agents listing houses that have the seller completely freak out on them at the end of 30 days when their house doesn't sell. Yeah. And I think that outside of a skill set or a training conversation, they're going to get fired. There's going to be an abundance of canceled listings or withdrawn listings in the near future because those sellers just aren't used to long listing periods like they had in previous years, and they're going to panic. And how that agent handles that moment in time is going to have a lot to do with, is there going to be opportunities of canceled or expired listings? I was talking to somebody recently and they said, I want to be your first love, your second marriage, and your third listing agent. Like, and there's a lot of truth to that, right?
Yeah. Yeah. There was a class I was teaching for some young agents. I don't know, this was about a month or two ago. And I asked them all, what's your value proposition? And there was some uneasiness of what to say. Right. And so this is where, if you've gotten in, especially the last couple of years, but even before that, if you don't know what your value proposition, outside of just knowing what's going on in the market, you got to figure out what your value prop is. And every one of you has one, but you need to know how to convey that story.
There you go. So out at the lake, I was talking to Lisa Rhodes in our office this week. She was telling me that Netris is only a snapshot of the picture of what really goes on out there. We probably should be tracking Navica out at the lake as well. But just the snapshot says there's 83 active, 15 option pending, 14 expired, 2 canceled, 12 pending, a little off, and then 12 or 25 closings. Month of October compared to month of September, pretty consistent, it looks like. So no big news there. Jim, you sent me a graph and I'm going to put it up here.
Yeah.
As we're talking about numbers, this tells another story. Why don't you take us through this?
Yeah. So as we look at the numbers here on this call, we're looking at everything, right? And so when we're looking at it, that's new builds, and there's a ton of new builds out there. But when we segment out the resale market, which is what we typically deal in on a daily basis, right? It's not that we don't do a lot of new builds. It's the bulk of our business is the resale market. And so what I have here is Dallas, Collin, Henderson, and Rockwall County, because Collin and Dallas are so large, it kind of shrinks in the other two. But if we were to take those two out, you see the same line right here. All right. There's nothing unique about it. And what we ended up seeing, though, is, now remember, I tell you all the time, go back to 2019. So if we go back to 2019, October is right on that 1,000 line. All right. Maybe just below that. And so if you compare it to where our lines are ending up, I was looking at Collin County. If you look at where our lines are lining up here, we're a lot lower, right? We are in fact lower. The dips, the lowest dips that you see are December's. So we are putting up December type numbers in October. We'll do it again in
December.
Yeah. Yeah. Below December. And so if you all feel like it just feels really quiet, that's why the resale market is putting up a below December number. In fact, it's 25% below where it should have been in October 2019. It's a big change. And so it goes back to what we were saying a little bit ago. As we're looking at all those numbers and we're seeing the consistency, that's the new rhythm right now. That's the rhythm that we were in really September, right? Except for that first week where we had a ton of closings that pushed out of from the holiday weekend. September, October, and really this first week in November, we're looking at the same thing. It's a new rhythm. So it's foolish for us to think that something's just drastically going to change the other way. So we have to get used to this rhythm and operate within it, right? So that's where casting this wider net, really diversifying what your lead gen looks like, and really being strategic, and that your calendar, you cannot stray from it. If you need to be in the office for 3, forget time frames. You need to be having 20 real estate conversations a day, 15 to 20. And at the end of once you do that, It's been a day. All right. Choose something else on your calendar to move towards, but you shouldn't stop your lead gen until you hit your numbers. That's how you're going to make it out of this market, is you do the things that matter first, right? And you do them until you're done, not until your time frame's up.
There you go. Should I be scared by this?
No. Hey, people are still buying and selling. They're buying a lot. They're buying a lot of homes, right? Yeah. But it should be an empowering moment that you know what to do, and not everybody else on the street knows what to do, right? Yeah. We're sitting here giving you the game plan, and like Brett always says on here, we're not going to sugarcoat this. And so that's why we wanted to take a good look at this resale graph. But it's not the sky is falling.
No,
this is what you should kind of expect going through a market changes like this. You can't have these rocket high prices and then high interest rates, but there's going to, if we listen to the economists and we believe that what's going to happen is going to happen, it's all going to shake out. But that's why you got to be doing the work right now, so you're prepared.
Jim, the bottom line of our industry, which is almost the insurance policy to our industry, or the foundation of real estate, is why do people buy houses? They get married, they have babies, those babies grow up and leave the house and they're empty nesters. Unfortunately, people get divorced. Unfortunately, people pass away. Unfortunately, people have to move into assisted living. Fortunately and unfortunately, people get relocated job-wise. Traffic patterns cause people to move. Commute times cause people to move. Lifestyle changes cause people to move. You got to get real clear in this industry around the things that cause people to buy and sell real estate. And you realize when you get that clarity that those things happen in every real estate market. Now, pandemic market caused people to buy and sell real estate for other reasons besides those foundational reasons. I wanted a prettier house. I wanted a vacation home. I want free money. I can buy a house for inexpensively. Those kinds of conversations created some excess, which is kind of the conversation we've been having, but it doesn't change the fact that there's still the foundational reasons people buy and sell real estate. And we have to have clarity on those, and then we go find those, right?
Yeah. Yeah. Perfect. And I would go forward and also tell everybody, we make the joke about, man, builders are back. They want to be our best friends again.
Yeah.
Let's be friends. Like, let's play in the sandbox together. There are a lot of really good deals that the builders have out there. We can advertise those, right? I think we can let people know what's out there. Now, I'm not going to put the builder's logo and everything up there because I also want kind of the draw, right? I want people to be asking me some questions. But if I let people know that, hey, Rockwall New Builds offering 2% interest rate, I don't know how I'd word it, but you see where I'm going along here, is let them know that there are incentives out there for them to buy and embrace the new build market. There's a lot of it out there right now.
Yeah. I have opportunities right now to buy houses with discounted interest rates. Yeah. I have opportunities to buy houses right now with crazy incentives coming on new construction. We have opportunities right now to where you could buy your next house and sell your current house later. We've got all kinds of opportunities. I just need to, I need you to raise your hand so I can share the different opportunities that are available.
100%. Yep.
All right. So bottom line, Jim, is now a good time to buy a home?
Oh, asking me? Yeah.
Yeah.
Yeah. We said it last week. You got to believe what you're saying, right? I'm not just saying yeah because I'm trying to sell you something. I legit, anytime anybody asks me, should I buy now or wait later? It's, what is your circumstance? And if you have the means and it works for you, now is a great time.
Yep.
Right. I don't know when COVID is going to happen. I don't know when all these different changes in the market are going to happen. We can just speculate. So if you're asking me when is a good time, right now is a good time, because it can also tell you that, you know, if you don't like your interest rate, we can do something about that. Right.
Yeah.
So yeah.
Anything correlates to timing, right? So I think the first and most important question that's got to be asked is, how long do you plan on staying in that house?
Mm-hmm.
If you plan on staying in that house for 6 months, it's probably not a good time to buy a house. But if you plan on staying in that home for any length of time, absolutely, it's a good time to buy a house. Another analogy would be, hey, if I were to buy a share of stock today, and I have intentions of trying to sell it tomorrow for a profit, that may not be a great purchase. But if I buy the stock today for a 2-year play, a 3-year play, it's probably a good time to buy some stocks. Not all. There's analysts inside of that, like there's good and bad and all that stuff. But timing is everything. The hold time has everything to do with how great that time is to buy or sell a house right now. Makes sense? So here was the giant story this week, Jim. That Open Door lost $1 billion in Q3 in once in 40-year market transition. I want your take, but here's my mountaintop view on this. You can't run a real estate business based on speculation.
No,
you have to have foundational dollars and cents and value and exit strategies and all the above. And obviously the headline's Open Door, but I literally have watched investors over the years try to build something and get burned because they got what do they call it, rose-colored glass eyes into the investment world. What do you make of this?
Yeah, no, it's exactly like that. When you're buying these homes in such bulk, and when the market's going up, you're making money, right? Because you can buy, you can hold while you're flipping, and then once it's ready to go on, in the market that we're in, you're gaining another 10% here, 20% here. It was just such a crazy market. But now when you do the flip, I want to read you some of these other numbers that are part of all this, right? This is all the big picture. It's not just $1 billion. It's that they had to lay off almost 20% of their employees, that their share price is down from 23 to $2.30.
Yeah. And
I said this a few weeks ago on this call that I felt like they were going to be in some trouble. They have 16,873 homes on hand right now. And they reduced their spending over the last 3 months by 50%. All right.
You can't cut fast enough.
17,000 homes on hand. That's a lot of supply. That is one of the hardest things about this industry, is exactly what you said. You can't predict what's going to happen from one side to the other. And when you do, you have to know people like us that are giving you some good market info, and that you can have some actual strategies instead of just constantly pulling in.
Well, I think in the real estate investment world, I'm using the term speculation. And the reason speculation is a big deal, because everybody kind of understands you can strike it rich in real estate and flip a house and make a chunk of change, or buy a house and have it appreciate and it goes through the roof and you're all excited. But the truth is, just like back in the panning for gold days, like there's certain tried and true methods that implore the time value of money over time. That's where real wealth is made. And that's how buying houses, putting them on 15-year notes, letting a tenant pay them out, those kinds of methods was real wealth accumulation, where Open Door got into a little bit of a speculation game, and they had big dollars and cents to play with. So they got big dollars and cents to lose too. right?
Yeah. And, you know, as you were saying all that, it kind of made me think about in our business, what should we take away from this is we hear all the time of, oh, this is the next big thing in real estate. This is, we've seen
The
so
shiny penny.
many,
Yeah.
oh yeah, so many of these. But what continues to work and people strive for are what I call the grassroots of real estate. It's not always sexy, but it's what works because it's a people business and we have to just communicate and have relationships with other people. And so that's what we have to, we can't ping pong ball of, oh, this worked for him, this worked for her. We have to have a little guy. We just went through business planning with Brian. We have to really be disciplined and stay the course of what we believe and have confidence in that's going to work in our business.
100%, 100%. So we got about 5 minutes. I want to hit a couple points. This article is talking about home prices rose faster in DFW's outer suburbs than its core during pandemic housing boom. So down here, home prices in outlying northern suburbs include Prosper, Salina, Frisco, and McKinney, notably soared higher in the wake of the pandemic than prices in mainstay cities. Price escalation in the farther flung burbs also outpaced closer in suburbs like Garland, Richardson, Carrollton, and Colleyville, according to the analysis of the zip codes. If you click this, there's 128 slides. So it would take too long to kind of run through all this, but the top price appreciation, 3-year change, 77% in Prosper. Isn't that crazy? 75% in Salina, 70% in Frisco. I don't know where Poolville is, Parker County. McKinney was 70%. You can kind of see it was mostly that northern Collin County. But then you get some of the Denton County, some of the Collin County, Rockwall County, Royce City had 64% 3-year change. That's an important number to know why.
Well, again, it paints the entire picture. You know, we can talk about how we may lose 5.5% that we've talked about, that we've lost 5% over the course of the summer. But the big picture is, if you've been in the house for a while, every time that you come to a peak of a mountain in real estate, right, there's going to be a little bit of a fall back down. We can't always just go like this. You've got to have some ups and downs to even it all out.
Yeah.
But the fact of the matter is, if over the next year and a half, we've gone down between 6 and 10%, let's say, because we may not feel that big of a hit here in the Metroplex.
You're going to 6 to 10. I'm still holding on 5.5.
Well, I'm counting what we've kind of dropped over the last 5 months or so.
It's all a prediction. It's speculation, Jim.
Yeah, I like it. But when you take it all in consideration, you're still up 50%. You're still up 60%.
100%.
Yeah, and it's, these numbers are pretty. If you go through all the slides and just kind of flip through them, they don't vary off a whole lot. Yeah, you're right around 60%, 58%.
Even the
so much.
Even the low slides, the 128th slide is Wise County was a 50% 3-year change. And I think you got to make sure people understand there's a perspective to that, right? Like, I lost my rock wall, but anyway, you know what it was. It was 60. So bottom line is understanding these things is what I call broadening the perspective to move people out of an emotion to logic. And when you're talking to a seller that's a little upset or frustrated, they got to do a price reduction, or, hey, a year ago, I could have sold my house for this, blah, blah, blah. You're broadening that horizon and saying, hey, you know, we've appreciated 70% in 3 years. So what's happening is you're trying to time the market, which is almost impossible, but you're still killing it. You're killing it. And then on the flip side, I think we talked last week, I had a conversation with a top agent at the office that a seller was frustrated, going to take their house off the market and wait for the spring. And you're going, hey, this number's coming down, not going up.
Yeah.
That decision could cost you $25,000. Are you okay with that? And, oh, it's going to cost me 25 grand to sell it in March compared to now. Potentially, it's all a speculation, but that's what they're saying.
Yeah. Again, when's the best time to sell? Well,
Yep.
Yeah.
There you go. Jim, this article is on Inman. I think it's a good article. We're going to run out of time, but 10 solutions to keep things moving forward. The deal's starting to fall apart a little bit. It's really a bulletproof the transaction conversation. I do think lender 911 is important right now. I think there's going to be a lot of lenders that are struggling to get deals across the finish line. You have to be strong and creative, problem solving. Appraisals are going to become a little bit of a challenge, I think, going forward. So really our skill set and the value of the real estate agent is going to be more and more and more in the near future. And at the end of the day, I love this industry. I know you do, Jim. I hope everybody listening loves this industry because foundationally, this is the American dream. And there's people that will always want that American dream. We just got to go find them.
Well said.
There you go, sir. Happy Monday.
Have a good one.